Welcome back. You're watching The Money Show. As the March 31st deadline comes closer, the one question that we get asked often is how can we save our money in taxes? And with the budget ringing in several changes in the income tax front, taxpayers have a lot of questions and dilemmas. And so on The Money Show, we decided to hold a tax pathshala to address all the questions on personal tax. Let's welcome on board Saraswathi Kasturirangan, partner Deloitte India, to take the discussion forward. Kasturi, good evening and welcome to the show. And yes, the deadline is approaching, but the biggest dilemma is, do we have to select the tax regime now, or that needs to be done in the next financial year?
So Kavita, every year the simplified tax regime has been in for a couple of years now. And yes, it's important for taxpayers to choose which regime they would want to come under. And as you rightly said, 31st March is just round the corner. And if they want to continue on the regular tax regime, then they should make up their minds saying that, should I make the investments now? If I want to be under the regular tax regime, which are the investments I want to leverage on, and so on. And before they make the decision, it's good to make sure that all taxpayers pick up, do at least a back of the envelope calculation on which is the regime that is more favorable to me. Because why get into some kind of an investments if you are taking up those investments only for tax benefit, if ultimately you are going to be under the simplified tax regime, which does not provide you benefits or deductions for tax saving investments. So I think it's important, one, to see which regime do I want to be under, and make sure that if I want to be under the regular tax regime, make sure that which are the list of investments which I'm going to do, then do a quick math, and then make sure that the investment's done before 31st of March. Technically, we do have time till the tax return filing to choose which regime I want to fall under. But there's no point in saying that I want to come under a regular tax regime if I've not made the investments before 31st of March, right? So that way it's important now to do your homework.
All right, so let's help our viewers do this homework. What if you want to stick to a regular tax regime? What is your to-do list now?
So first, I would say make a collation of what are your deductions that are possible under the regular tax regime. So you would have HRA, you would have leave travel concessions. If you've got all of this, pull out all the receipts and make sure that you are able to make an estimate of what kind of deductions you have. Also look at, there are some regular investments which you cannot stop. Say, for instance, I've taken a life insurance. I would need to make my annual premium payout, right? So, and if you're already on a PF regime, you would be contributing to the Provident Fund, which incidentally is available both under the regular as well as a simplified tax regime. So, National Pension Scheme, again, employer contribution is available both under the regular tax regime as well as a simplified tax regime. But if I make an employee contribution to NPS, that is available only under the regular tax regime because it comes under ATC along with the rest of the 1.5. So it's important to identify what are the investments I've been making and see which of them qualify under the regular tax regime and under the simplified tax regime. The others which one could be looking at is the Public Provident Fund, contributions to the National Savings Scheme, equity-linked savings scheme, for instance. ULIPs could be another. So make sure that you make a list of what you have already started, see which of these mandatorily have to be continued, and then take a call saying that, am I going to continue investment in this? Some of those, as I said, you cannot stop investment, but you can reduce the amount of investment. Say, for instance, Public Provident Fund. Yes, once you've started, it's mandatory to keep investing every year. But if you've normally been investing, say, 50, 60,000 rupees, or maybe even 1.5 lakh into it, you could, if you're going under the regular simplified tax regime, you can take a view. Yes, I will make a lower investment. Well, because it's a good investment anyway to have, but I'm not really looking at it from a tax perspective. So look at all that are there under section ATC. And I think ATC is something we are all familiar with. The limit is 1.5 lakhs. It's been there for years. There are certain investments which you need to continue, certain investments which can be taken year on year. You can make a decision for the year afresh. And there are also certain things that you may need to look at. For instance, if you have loss from a house property, you get the set off of up to 2 lakhs. and that's available only under the regular tax regime. It's not available under the simplified tax regime. So that's again something you may need to keep in mind before you take a call as to which one you want to choose.
All right.
I
So,
hope that helps, Kavita.
yeah, totally. I think you've answered most of my questions. So, one crucial decision, one need to decide regular tax regime or a new tax regime, and based on that, they need to figure out where their tax saving money should ideally go. Thank you so much, Kasturi, for being on the show and helping our viewers with that today. On that note, let's take a quick break.